Ladies and gentlemen, I'm making this video today on Bitcoin to discuss something very important, and I don't say it lightly. I think that Bitcoin looks good right now from a daily perspective. I think that the structure is bullish. I think this is supported quite well on multiple charts. I believe there could be one more downside swing, and that downside swing could take us lower than the last two lows, but overall, I'm actually not concerned that much about the Bitcoin medium-term structure. The thing I am concerned about is the Bitcoin monthly chart. Now, the Bitcoin monthly chart is seeing 3 days and 14 hours until its next candle close, and I'm going to be discussing in this video why that candle close could make or break Bitcoin from a longer-term perspective. So let's get into it, guys. Guys, before we get into the video, I'm speaking about an exclusive promotion we have with the Wolves of Crypto channel on the Bitget exchange. We have a bonus program right now. If you deposit 1,000 USD, you'll get a 100 USD bonus. If you deposit 500, you get a 50 USD bonus. If you deposit 100 USD, you get a 10 USD bonus. That is exclusive with my referral link. On top of that, you get a 15% trading fee discount for life on the exchange if you sign up using my referral link. It's also got the lowest fees in the game. It's non-KYC, everything you need from exchange. If you want to get access to that promotion, you can do so by signing up using my referral link, and it will be active to you. Check it out, guys. We have seen a retest or close to a retest of the bottom of the descending wedge formation on Bitcoin, and this means that Bitcoin is in or has been in the bounce zone. Now, the bounce zone on Bitcoin, let me simplify it quite simply for you here. Regardless of all the moving averages, regardless of all the indicators, I see the bounce zone on Bitcoin as basically between 24.3k and all the way up here at around 25 to 26k. There's a reason why that zone is so large. That is the vague bounce zone. Now, it's comprised of multiple things. I'm going to bring back all the indicators in a second, but first of all, it's comprised of the region in which we had this double bottom very recently. It's also comprised of things like the top of this entire range we saw from June 2022. It's comprised of multiple indicators on the weekly chart as well, and those indicators include things like the Gaussian channel center line, the bull market support band, the green line here, which is a 200-week SMA, the fact that the volume profile volume is ramping up around this region as well, the fact that the red volume is downtrending in this region as we move further down, which is very good news as well. There's multiple things to dig into there on the weekly chart. I'll look at all that in a second, but ultimately I think that this entire region between 24.3k and around the 26k region is basically a bounce zone. For that reason, I think that Bitcoin has dipped into the bounce zone. Will it re-enter the bounce zone? It's certainly possible, and we're going to discuss this in this video, but I do think that Bitcoin will bottom out somewhere in that region. I don't think we're going to be going much lower than 24.3k. It would be surprising if we did. We've also got this yellow uptrending line over here that supports it quite a lot as well. But what has happened recently? What's the recent price action looking like, and when will we actually make a decisive move? Because I can tell simply by crypto analytics and by crypto volume that people are getting very bored of this price action and the market's not moving very much. And the daily exchange volume across all cryptocurrency exchanges has reached the lowest level as per this chart on a 7-day moving average that we've seen since around 2020 or since the end of 2019. Actually, since 2020 over here, just after that COVID dropped towards the end of the year, actually, the second half of the year in 2020. So basically, lowest volume we've seen in almost 3 years on all crypto exchanges. And it does make sense, okay? And the reason it makes sense is because we're at the same part of the cycle that we were 3 years ago. This is when we saw the lowest volume roughly that we saw in 3 years, somewhere over here, and we're in the same kind of yellow zone here. Now, I've outlined what the cyclical theory looks like on Bitcoin very simply in this chart. We have the green bull market phase, the red bear market phase, and the yellow accumulation phase, and all of these kind of these zones here last the same length in time, right? 500 days for the green, 500 days over here as well, and 500 days over here as well for all the greens of 500 days, and all the reds for the same amount of time, and all the yellows for the same amount of time. And this kind of goes to illustrate that, the cyclical theory is not random. It's very clear what Bitcoin's doing. It's following a plan very closely, and the plan that it's following right now basically indicates that Bitcoin will be going, for the most part, sideways and mostly upwards. It could go upwards, climb as high as something like 50k, but until the halving, that's kind of the plan. And it could also, in the same sentence, it could just go sideways. We're in that accumulation phase. We're on a macro scale. We don't really do too much. We just kind of go sideways, maybe slightly upwards. In 2014, 2015, we went sideways and actually retested the lows, around 6 months after we tested the lows, maybe 9 months. So, we can certainly do that again. It's definitely possible from a cyclical perspective. I just don't think it's likely at this point. What have we done in the last few hours? Well, as we know, we have this larger descending wedge formation. People thought it was a descending triangle with this yellow line in the middle here. They thought we broke down from a descending triangle. I made it very clear that I didn't believe this was a descending triangle formation. I think I was correct in that because now we've broken back above where the bottom of a triangle was meant to be. So I was correct in that regard. We were not in a descending triangle formation, and that's the power of using actual charts rather than, letting your emotions get in the way there. We were not in a descending triangle formation. We're actually in a descending wedge formation. And this further emphasizes the point I've been making over and over and over again. Bitcoin is bullish right now on a macro scale, still. Okay? Yes, we are in a local downwards trend. I've discussed this in the last few videos. I'll discuss it again. Just because we're in a local downwards trend in which we're seeing lower lows and lower highs, it does not mean we're bearish, because a local downwards trend can be a descending wedge formation. And a descending wedge formation is a pattern of continuation, which means you move up, you go down into the descending wedge, right? You break it to the upside. That is what a descending wedge is. And we are seeing a textbook descending wedge on Bitcoin as per that, and as per logical TA analysis, right? So yes, we're seeing a rounding out top, but overall, the head and shoulder formation that people thought we were seeing, which I disagreed of quite strongly, we would have broke the neckline to the downside. Now we've seen two fake outs from a supposed neckline, and we've seen a fake out from the supposed descending triangle as well. I think it just stands to reason at this point that you can say we're in a descending wedge formation, and that's actually quite bullish. That's, certainly not bearish, and it's certainly not bearish until you break it to the downside, which can happen, but it's not very likely, especially given the major support we have. So now that we know that Bitcoin actually is in a bullish continuation structure, we can analyze what's happening within the bullish continuation structure. We can zoom into something like the 4-hourly chart, and we can see that, yes, we are in a bullish continuation structure, but it's not all certain that we're going to go upwards from here, because actually within the wedge formation, we don't have the cleanest structure forming. What we have really is a horizontal, it's not necessarily a horizontal channel formation. It's actually not a horizontal channel formation. It's more like a descending triangle formation. And it's going to be quite an extended one. We could be seeing the apex very, very far away. But we could also break down very soon or break up very soon. It really depends. We have seen a double bottom at the same time, so perhaps we just break up right now. But as of right now, we are testing resistance, and there is a very decent likelihood that we can swing back down and retest these lows, and potentially even retest the bottom of the wedge itself, which would be down here at around 25.5k down to 25.2k. So don't expect Bitcoin to break upwards just yet. Could it happen? Yes, it could happen, right? But you have to acknowledge the fact that we are in a bearish short-term structure, and hence we could come down and swing to the bottom of the wedge once more. I do acknowledge that, and I certainly think that that is definitely a possibility. In fact, it's probably, reasonably likely. So look, again, we're looking for a potential swing back down to the bottom of the wedge. We do have to keep in mind there's major support, so any kind of swing to the downside could be eaten up very quickly, just like the last two have been. And we're acknowledging the fact that overall on a daily chart, Bitcoin actually doesn't look too bad. The only problems I do have with Bitcoin, they don't stem from something like the daily chart, because we can have the Bollinger Bands compressing as well on the daily chart, which means a move is coming very soon. So, this pattern will be breaking soon. We also have Bollinger Band compression. If we remove everything else, we also have Bollinger Band compression on the weekly chart as well, which is indicative of the fact that a move will be coming very soon. So if you're worried about how long we've been consolidating for, don't worry. It will be coming to an end very shortly. We'll be making a move very shortly. Within probably the next week or so, we'll probably be making a move out of this wedge formation, I believe, to the upside. Maybe a little bit more than a week. We'll have to wait and see. But the only charts I'm actually concerned about right now, because I'll tell you right now, I'm not actually concerned about the daily chart, to be honest with you. The charts I'm concerned about are the Bitcoin monthly chart, and I'm also quite I wouldn't say I'm concerned about it, but I'm keeping an eye on the S&P 500 and traditional market charts. Okay, so we'll start off with the Bitcoin monthly chart. The Bitcoin monthly chart doesn't look particularly good for a couple of reasons, and they could very well be resolved. Now, if we come up within the next 3 days and 14 hours, which will probably require a break of this 4-hour structure to the upside, but we could certainly do that, and we could swing upwards here to something like 28k by the time of the monthly candle close. If we do that, that would be excellent, because right now we are threatening to see a rejection from the red resistance line on the monthly chart, and we're threatening to lose the 21 EMA on the monthly chart. Now, the 21 EMA in the monthly chart has been major in the past. Every time we're breaking above it, we've gone upwards massively, okay, and every time we're breaking below it, we've gone downwards massively. So losing it this time will not be good. So within the next 3 days and 14 hours, right, I would really like to be seeing Bitcoin climb upwards back above something like 28k, so we can get a close above that blue line at least. And preferably, I would like to be seeing Bitcoin climb above 29k within the next 3 days and 14 hours and close above that red line. I'll tell you right now, and I'll tell it here, and this will likely be involved in the title of this video. If Bitcoin manages to get a close above the red line, above 29k within 3 days and 14 hours, within the monthly candle close, Bitcoin is completely out of the woods for any bearish concern anyone might have had throughout the month of May. I'll tell you that right now. So we need to be, look, we want to be seeing that. We really want to be seeing that. A 29k close for the end of the month would be very strong for Bitcoin, okay? That's what we want to be seeing. As I said, in order to do that, it is likely that we will need to break this 4-hourly structure to the upside. We are testing it right now for resistance, so it will be very interesting to see what happens there over the next few days. We do have Bollinger Band compression on a daily chart. That could maybe push us over the top and push us to the upside. So I did say before, people should be considering we can see a swing down to the downside. We very well can, but I'm telling you right now, if we want to be seeing a strong monthly candle close, it is ideal that Bitcoin defies the odds on the 4-hourly chart and actually moves to the upside instead. That is the ideal scenario, and it certainly could happen. And I've looked at reasons why it could happen at the start of this video. I looked at the abundance of support we have in this region as to why it could happen, but I've also haven't looked into this yet. I want to discuss it. I want to look into the fact that Ethereum and the total cryptocurrency market cap look very good as well. They are both in descending wedge formations. Not only are they in descending wedge formations, they have also seen RSI triangle formations, RSI wedge formations that have both broken to the upside. We've seen an RSI wedge formation break to the upside on Ethereum, and we saw an RSI wedge formation break to the upside on total cryptocurrency market cap. Now you might be thinking, why is this relevant, Wolf? Well, I'll tell you why it's relevant. Because if you know anything about TA, you know anything about RSIs, what you generally see is when the RSI, okay, reflects the same pattern we have in the price chart, which is doing on both Ethereum and total cryptocurrency market cap, you generally see the RSI breakout to the upside. And if you see the upside breakout, you see the patterns on the charts follow through with what the RSI did. The RSI foreshadows what happens in the price chart. And based on that, which is actual TA, we should be seeing the Ethereum chart break to the upside, and we should be seeing total cryptocurrency market cap chart break to the upside. And obviously, if we see both of those things, given the fact Bitcoin's in a descending wedge as well, we'll probably be seeing a Bitcoin break to the upside as well. So I do not think Bitcoin and the cryptocurrency market are in bad positions here. Not really at all, right? I think that there are threatening things like what's going on the monthly chart, which I've discussed before. We really want to be seeing a strong close there in 3 days and 14 hours. If we do not, that's when we're running into a bit of trouble. But as of this point, I don't think we're in very, very weak positions. I don't think so on the daily chart specifically. What else can we look at? Well, we can look at the fact that bond yields are on the rise here. And this is where we get into more macro stuff. This is where we get into more traditional market stuff. Now, we have kind of proven, and it's not for me to prove, but it's just the reality of the situation, that Bitcoin, as of right now, is uncorrelated to traditional markets. It's not correlated as of current, okay? That's been proven. There have been charts that have come out. We've discussed them, I think, in the last video I did. We looked at how Bitcoin is actually uncorrelated at this point in time. It's got a 0.2% correlation coefficient. So a 0.2, so 20% correlation to the NASDAQ, which is considered uncorrelated by mathematical standards. So Bitcoin, technically right now, if Bitcoin, if the S&P or if NASDAQ was to drop right now, realistically, based on that chart, if Bitcoin held its own, it would not go down as well. It could do whatever it wants. Bitcoin has independence right now. Now, that independence doesn't have to last forever. It certainly could revert back to the way it was, in which Bitcoin was following traditional markets, but as of right now, Bitcoin is independent. But the fact that it could revert back to the way it was means we still do have to care about charts like the S&P 500 and charts like the NASDAQ. I like to look at the S&P 500, and I will say right now that the S&P 500 probably doesn't look very strong. And the reason being is because bond yields have skyrocketed once again, and this means that basically the financial risk has gone up, because the only reason bond yields ever go up, right, is when basically the government accepts the fact that the markets and the economy in general are riskier than they were before, and hence they have to give higher returns to their bondholders, right? So people who buy bonds get higher returns when the economic situation gets bad. So it's getting bad again, and the fact that it's going up means that it's getting bad again, or at least the market's getting more risky again. Okay, so they're giving out higher returns. Now this is bad for the S&P, and the S&P wasn't in a good position to begin with. The S&P has a triangle formation on the RSI, okay, and it also has an ascending wedge formation in the price chart that it's been forming since around October 2022. So we could have a lot of time of more sideways consolidation on the S&P. The apex isn't for a long time, but ultimately that probably will break to the downside. It's not certain, but it probably will break to the downside. Rates have probably only recently topped out. If not even, we might see one more rate hike, right? And we'll look into that closer to the date. But I think there is another FOMC decision within probably 20 days, right? And we'll look at that. But, there's some speculation that rates might have actually topped already. There's some speculation they might raise a little bit higher. And obviously, if they have topped already, that does kind of increase the favor of the S&P bottom being in. And if they haven't topped already, that does decrease it again a little bit. Now, bond yields going up aren't exactly reassuring, but we'll have to wait and see. Now, I've spoken about before, generally speaking, the S&P 500 only bottoms out when rates have actually started decreasing. Now, they haven't started decreasing yet, and they might not have even topped yet. So it is still on the table that we do see more corrections in traditional markets. It's still on the table. I'm not going to say it's certain, because I don't know, but I am saying it's certainly still on the table. It's not off the cards at all. So if we see the S&P go down further, it does raise the likelihood of Bitcoin seeing something more like a 2015 accumulation period rather than something like 2019, where we come down again and then zoom around and just chill for a while and then only go up towards next year. Now, that's on the table as well. Look, I've said it before, I'll say it again. Anything is on the table. Anything other than a new low for Bitcoin from a cyclical perspective is on the table. And I think that as of right now, the cyclical theory is not even slightly in danger. And I don't even think, as I said before, the short term or the medium term is really in danger. I actually think at this point in time, it's actually more likely that we see a accumulation period similar to what we saw in 2019, where we see an impulse to the upside. That's what I think is more likely at this point. You can call me a perma bull if you want to, but it's just not based in reality, because I was bearish throughout the entire drop and only flipped bullish to 16.4k. So, keep on calling me that if you want to, but it's just not true. I just trust the cyclical theory. I know that it's played out in the past. I certainly, it's not even that I believe it will play out again. I just think it's the best bet. Rather than speculating on traditional market correlations, I think the best bet is to trust trends that already exist. Even looking at something like the daily chart, which I've seen before, and the weekly chart, I've said it before, I'll say it again. Unless Bitcoin drops below 24.3k, I don't think Bitcoin is in danger even from a medium-term perspective. The one thing we're looking at, as I said before, really is the monthly chart. We want to be seeing a very strong candle on the monthly chart, a close above 29k on the monthly chart. That would be great to see. 3 days and 14 hours, that's what my eyes are on right now. So with that said, I'll leave you there, guys. Check out the VIP group, guys. Go ahead and check it out. This is the VIP group information, the information page here. You can join this group for free. Release the results from the VIP group. Every single trade we've ever taken in the VIP group, the results for the trades are released here in these PDFs, and you can check out all the information for joining on this page for 3-month, 6-month, and 1-year subscription to the VIP group. Very profitable group. Highly recommend you get in there if you're interested in making money trading altcoins. Also, guys, the Crypto Academy, Become a Trader 10-unit course. This course will teach you everything you need to know about trading. It shows the units, topics on the website right here. You can find the website link in the pinned comment description below, and you can throw us an email, and that email address is on the website as well. cryptoacademycourses@gmail.com will send you back all the relevant payment information and information you might need to make a decision. Thank you guys for watching the video. I hope you enjoyed it, and I'll catch you in the next one.